Welcome to a new week. It's the beginning of a 7-day journey into the world of business here on Business Morning, and it comes to you live on Channels Television. I'm Ini John Mekwa. Let's begin with oil prices. It fell today, pairing gains from the previous session as fears of a global recession weighed on the market, even as supply remains tight amid lower OPEC output, unrest in Libya and sanctions on Russia. Brent crude futures for September slipped 36 cents to $111.27 a barrel, while U.S. West Texas Intermediate crude futures for August delivery dropped 34 cents to $108.09 a barrel after climbing 2.5% on Friday. U.S. consumer sentiment dropped to a record low in June despite a marginal improvement in the outlook for inflation, as the Federal Reserve says its commitment to reining in inflation was unconditional and increasing concerns of interest rate hikes. Output from the 10 members of OPEC in June fell by 100,000 barrels per day to 28.52 million barrels per day, off their pledged increase of about 275,000 barrels per day. We come to Nigeria now, where data from the Central Bank of Nigeria shows that assets of lending institutions rose by 11.15 trillion naira in 1 year to 64.32 trillion naira as of the end of April. The asset had hit 53.17 trillion naira in the corresponding period of 2021. The 2022 figures shows a 21% increase over the period. The growth, according to analysts, was driven by balances from CBN with banks, automobiles, and credit to the real sector of the economy. Total assets of the banking industry grew by 20.97% from 53.17 trillion naira in April 2021 to 64.32 trillion naira in April 22. And this was driven by balances with CBN, banks, automobiles, and credit to the real sector. Still in Nigeria, dredging of the Calabar port continues to be delayed and delays the proposed work, which is aimed at decongesting Lagos ports, consequently easing export experience and boosting non-oil revenue. The Managing Director of Nigeria Ports Authority, Mr. Mohammed Bello Koko, has however promised that efforts are underway towards an out-of-court settlement.
For dredging of the Calabar Channel was awarded so many years ago, but there is a litigation between Nigerian Ports Authority and the contractor that was awarded that contract, and this has inhibited our ability to dredge the channel. But what we have done in the recent times is to start looking for, out-of-court settlement. So Nigerian Ports Authority, working with the Federal Ministry of Transportation and Ministry of Justice, has resumed discussions in terms of how to settle this out-of-court. That has to be done in order for us to be able to either return the same contractor to continue dredging or appoint a new channel management company to do the dredging of the channel. That has been what has delayed and stopped the dredging of that channel. And we are taking this very serious. It's one of the reasons why we came actually here to also meet with terminal operators and discuss with them and reassure them that government is taking all the necessary steps to ensure that this lingering issue is resolved as quickly as possible. But we believe that there are still businesses that can come here, imports that can be brought to Calabar rather than being taken to Lagos. Don't forget, Calabar is strategically located to be the nearest port to the northeast and also some of the north central states.
Now let's, maybe very close to that, the Nigerian Shippers Council, but this time they are in collaboration with the National Judicial Institute. They are set to host the 16th edition of the International Maritime Seminar for Judges. The event begins tomorrow, the 5th, and it lasts till Thursday, the 7th. We'll have to whet our appetite towards this. Mr. Emmanuel Jime, he's the Executive Secretary and Chief Executive Officer of the Shippers Council, joins us from our Abuja studio. Good morning. Thank you so much for joining us this morning.
Good morning, and thank you for having me.
Thank you for being on the show, Mr. Jimmy. Well, this is the 16th edition. Now, you're supposed to have this 16th edition in 2020, but I mean, we all know that 2020 can now be comfortably termed the year of the pandemic. But
COVID year.
Yeah, but I mean, you've had 15 editions before now. Tell us the impact that this has had over time that should make us look forward to this 16th edition. Sorry about that.
Well, once again, thank you so much, Channels, for giving us this very important platform. A platform that we will now be able to use to inform the viewing public, both local and internationally, of the Maritime, International Maritime Series, which I can now say is back. As you noted in your intro, the last edition held in 2018. It is biennial, which is to say that it's a program that holds every 2 years, but we were not able to hold it in 2020 because of COVID. So I'm happy to announce that this year, the seminar, Maritime Seminar Series is back. The program will kickstart this evening with a cocktail dinner that will be hosted by the Honorable, the Chief Justice of the Federation, who will be hosting his colleagues who are coming from all over the continent and indeed from far-flung places of the globe to be attending at this particular seminar series. That cocktail dinner is holding at the foyer of the Supreme Court this evening. That officially will be the kickstarting of the program. Then tomorrow is actually the day when the program will actually officially commence. Then, of course, we're going to have top experts in the field of maritime practice, lawyers, and indeed all stakeholders who have an interest in the development of the maritime and the maritime sector. That it will be the beginning of our program, which I indicated will start tomorrow. Let me just give a little background, if you permit, on the conceptualization, if I may use the word, of the series. So first, the maritime transport actually constitutes a whopping 95% of international trade. Now, if you put that in context, that begins to give you an indication of, the monumental impact that this sector has on every nation's economy, and of course, certainly on the Nigerian economy as well. That being the case, it has become necessary that we are concerned about the viability of the sector, because this is a sector that generates revenues in the trillions, and of course offers huge employment opportunity to Nigerians and indeed all over the globe. There are key drivers, for the viability of the of the sector. One of which is, of course, the legal framework that is in place. Now, what that means is that there is a need to have a clarity as far as the legal regime that is in place in every clime is concerned. Business, as you all know, will never go to a place where there is lack of clarity. And as far as the legal framework and the legal regime of any jurisdiction is concerned, unless there is a clarity or purpose, so everybody that wants to do business in our clime is very well advised and very well informed, you're not likely going to attract, the sort of business interest that your nation may wish to present. So those of us who studied law back in the 80s will recall that the maritime law was not actually part of the syllabus of universities back in the days. And I think as recent as even the late 90s, we haven't had a situation where maritime law has been offered as a course in any of our Nigerian universities. That being the case, it then means that there was a gap in knowledge as far as the adjudication of maritime matters and maritime cases was concerned. The Shippers Council, in the exercise of its mandate as port economic regulator, and also, of course, basically a protector of shippers, identified this gap, and back in 1995, went out and stretched a hand of fellowship to the National Judicial Institute, where we then began collaborating as far back as 1995 to institute this international maritime seminar series. That actually was the background, and that was the reason why this particular series was actually conceptualized. So that's actually the background, and I thought I should be able to lay that as so we can actually introduce the maritime series, so people are appreciative of why was it necessary in the first place for us to conceive this. Now, as I said, the Nigerian Shippers Council is working in collaboration with the Nigerian National Judicial Institute for the promotion of this particular maritime seminar series. And we've had it for all of this while until the break that came in 2018 because of COVID. Now, let me speak very quickly, if you permit me, to why the series are important as far as the sector is concerned. You see, the International Maritime Seminar for Judges was founded actually on the premise of updating the knowledge of judicial officers, on the crux of admiralty law, but also actually to be able to assist government in the development of policy as far as the maritime issues are concerned. Not only is the Maritime Seminar Series able to impact in that way, we also have, the participation of members of the National Assembly. And as you know, if there's any reform as far as our laws are concerned, that is the agency, that's the institution that has the responsibility for reforming our legal system. So in our series, there is a participation of all stakeholders. This is the platform that draws all of the stakeholders. We're talking now about judges. We're talking also about particularly judges of our superior courts of record. We're talking, as I said, about members of the National Assembly. We're talking lawyers and indeed law practitioners and everybody who is a stakeholder in our maritime domain. So what we do with the seminar, essentially, therefore, is to generate an opportunity for discussions, so that there is a robust engagement. And in the course of that robust engagement, we have been able to achieve a number of milestones that have, that we've been able to, to develop in the course of the seminar series. Let me say, for instance, that if anybody today is happy about the cabotage law, for example, which is a policy of the Nigerian government put in place in order to allow for local participation of Nigerians in the shipping industry. That was actually one of the, should I say, outcomes, an achievement that was recorded in one of the past seminars that we held. Today, the cabotage law maybe hasn't really achieved to the extent that we may have wished it because of some challenges with the implementation of the law. But the fact of the matter is that there is a legal framework and there's a policy pronouncement by the government, which emanated, so to speak, from one of the engagements of the seminar series that we held in the past.
Mr. Jume,
now, I've spoken about, the initiation of laws, policies.
Yeah, so
Yeah.
I mean, just as you noted, the maritime industry is very important to the economy. I mean, if anybody doubted that, the war in Ukraine and the disruption in activities in the Black Sea, you know, clearly emphasizes that. So we do know how important the maritime industry is. And well, from all you have enumerated, the seminar has been impactful to the industry. But we want to understand how this has translated to economic growth and development in this number of years that you've been having this seminar. Could you connect it, the seminar, and then the impacts on the economy?
As I indicated in one of my introductory remarks, so there are a number of legal reforms that are in place now that are a direct result of the impact of the seminar series. I've just first referred us to the cabotage law, which obviously has given Nigerians ample opportunity to now be able to participate, you know, in the shipping sector of the economy in ways that could never have been achieved if that particular law had not been enacted. That is a direct consequence of, you know, the impact of the seminar series. There's also today a law that we're processing in the National Assembly called the COGLA. That is the Carriage of Goods by Land Act, which has been processed in the National Assembly. Now, the reason why I mention this particular instrument is so I can bring to the notice of Nigerian shippers that for too long we have had a situation where the shipping companies did not feel comfortable in issuing true bill of lading in order for cargo, you know, to be taken straight to inland ports where we have inland dry ports. Now, the efficacy of inland dry ports is to the extent that we have been able to get those ports declared as ports of origin and ports of destination, which then means that cargo coming from anywhere and anywhere on the globe will find its destination in a place like Kaduna, for example, or now that we have Kano, the Dala dry port in Kano coming on stream. Now, a shipper sitting in Kano can now simply transact his business with a shipping company and expect that his cargo will be delivered right at his doorsteps in Kano. But to be able to do that, you needed to give the shipping companies a protection that allows them to be able to extend this true bill of lading so that they're able to take and deliver cargo straight into such a place like the inland, you know, dry ports. Now, that instrument will not be finding its place in our legal firmament, except for the fact that the International Law Seminar provided a platform for a discussion that led to the emergence of that platform. You're asking about the impact of the International Law Seminar. Let me tell you, first and foremost, the fact that we now have a judiciary that is up and doing, that is very well advised in terms of the knowledge base that it has gained arising out of the interactions coming from the International Maritime Seminar Series. That means, first and foremost, that we're having effective adjudication of matters. We're also having timely adjudication of matters. And every businessman will tell you that time is money. And to the extent that you are able to get your disputes resolved very, very quickly, fastidiously, timeously, that clearly is an opportunity that saves a businessman a lot of money, because you're not then wasting too much time fighting matters inside, you know, the law courts. So that also is an achievement, in my opinion, as to, you know, the impact that the Maritime Seminar Series has brought to bear on the economy. Don't forget, a robust maritime industry also necessarily means that we're going to have huge employment opportunities for our teeming youth. Now, you and I know that perhaps one of the greatest challenges of our modern times is the fact that our youths are not gainfully being employed, which of course leads all manners of consequences, including of course cases of insecurity. And so if you're able to provide gainful employment for our youths, and you're taking people off the streets, the implication of that is that you're now reducing the incidence of insecurity in the polity. And then, of course, you are making youth to be, of course, very, very useful to themselves and, of course, useful to the society as well. So that is also an impact that I believe has arisen out of,
the seminar.
Sorry.
All right.
I thought you were saying something.
Yeah, I was just agreeing with you. I mean, the issue of unemployment, especially unemployment of the youths, I mean, can be traced to insecurity, which is one whose huge conversation that Nigeria needs to have and continues to have anyway. Thank you so much, Mr. Emmanuel Jume, the Executive Secretary and Chief Executive Officer of Nigerian Shippers Council. We do wish you the very best as your seminar begins formally tomorrow. And of course, we'll be waiting to feel the impact as it spreads to the economy. Enjoy the rest of your day.
Thank you so much for the opportunity one more time, and I truly appreciate the fact that we have this chance to engage in this conversation this morning.
Thank you for coming. All right, so we'll take a break now. When we come back from that break, still staying around production, the rail sector, agriculture, insurance, and how it affects you is what we'll be discussing next. So do join us after the break. This is Business Morning on Channels Television. Yeah, welcome back. You're still watching Business Morning on Channels Television. We're providing farmers with financial protection against production losses caused by natural perils such as drought, excessive moisture, hail, frost, wind, and wildlife. Aptly captures what agricultural insurance means. But here in Nigeria, generally, the trust in insurance is very low. So when one talks about insuring agriculture, I just wonder. But we have an individual with a first-hand experience in this, Mr. African Farmer Mogaji, Chief Executive Officer of Farm Credit, to tell us what's going on with insurance and how important it is. Good morning, Mr. Mogaji.
Thank you for having me.
Good to have you. Well, how popular is insurance in your sector with the farmers?
Well, insurance is not popular at all. And from data published in Punch last year with a meeting that they had, less than 5% of farmers still get agric insurance. It's not popular. Many farmers don't even know agric insurance exists.
But how necessary is it?
Oh, it's the only way to go because the sector is heavily dependent on rain, climatic conditions, on weather vagaries. So you need insurance.
And pests, I think.
And pests, yes. We do have pests, but with pests you have solutions, either biological or non-biological, but basically things out of your control. You know, climate mostly, either you get too much rain or you don't have enough rain. And yeah, with the pest, you can have invasions. You know, like currently the government acknowledges through Daily Trust last week that there's some form of invasion of locusts in some northern states, you know, so you have to insure because you can't handle that.
Yeah, because I do remember in the midst of COVID, I even had to cover some farmers, piggery, poultry. They had invasion, and they lost a lot of livestock. It was terrible.
Yes, that's with the bird flu and the African swine fever.
Yes.
There's no solution. So if you don't insure, you lose it all.
So why has it not been embraced? Is it because, I mean, when you look at the climate, for instance, Nigeria has a relatively stable climate. Is it because of that?
No.
Or why do you think?
No, so...
Or it's just we don't trust in insurance. We don't believe they will come through when we need them.
Yeah, I think there's a bit of apathy when it comes to insurance. And it's not real, really. It's basically what people have said, word of mouth, that almost everybody has come to believe. But from experience, agric insurance still works in Nigeria.
It still works. So we have to convince the farmers.
Yes.
I mean, in these days when we are talking about the threat to food security, there needs to be something to ensure the little that we have so that we don't end up losing that. So I hope we can achieve that at the end of this conversation.
I hope so. I hope so. You know, so many people don't believe in the insurance, and also you have some challenges with the insurance companies, except for government. Government's insurance company is still the most efficient and effective, but they can still do better vis-a-vis how long they've been in the sector for 30-something years. The private sector insurance companies, you know, they just do copy and paste. When it comes to like implementation, there's a lot of talk and less action. Just very few people can do that.
Okay, so I think when it comes to insurance, it's not just about agriculture. Even apart from agriculture, I mean, I know that the government has been trying to convince Nigerians on even car insurance for a very long time. And a lot of Nigerians are still not convinced, property insurance and all of that. But when you say that the government companies are more reliable, it seems odd, because normally the private sector seems to come through better, more dependable, more efficient in businesses than government. So I'm trying to wrap my mind around that.
So like the Nigeria Agric Insurance is actually run private sector, but owned by government.
Explain that, please.
Yes, so you have them operate like any private sector, but the beautiful thing about that is that 50% of the premium is already paid by government, and this is running almost 35 years. So it's already paid by government, shared with the state. So you pay the premium, so whatever premium you pay 50% of the premium, but it is run like a private sector business, not government. But government, so funding and core affected a bit. But when you check it, most insurance, you don't have claims, you know, regularly. You might have claim once in 3 years, once in 5 years, you know. So that gives insurance companies also some cushion to be able to run, especially the government insurance. And they're in every state of the nation. Every state of the nation. I've engaged them since 1997. And I still have a good relationship across the country. So it's working, it's functional. There may be some delays because of lack of efficient funding, but they are still operating, you know, more effective, and they can carry more shock than other private sector insurance companies.
Why should the private sector get involved? If the government, using public funds, can do 50%, it obviously makes it easier and cheaper for them, you know, to run the business. And I want to believe then they can offer better costs,
yes,
you know, better, maybe lower premium to the farmers. So, I mean, why should the private sector get involved then if the government is doing 50%?
The insurance sector is very huge. Government can't cover it alone. When it comes to speed, efficiency, you will find the private sector, you know, keep moving faster. You know, everything is naira and kobo profit driven. So you would find quite a lot of people, especially the big players, tilting towards the private sector because they know they can get things done, they can negotiate, but with government there's still some bureaucracy involved. So for the smallholder farmers, government is best for them, and there's now almost 97% of the farmers, while for the big players, the private sector, and we need quite a lot of more private sector to come in. Because the more competition you have, the more flexibility, the more innovations, the more products we would have. So we actually need more private sector to come in, and we have very few, a handful of the insurance companies are there. And some of them even take the insurance and reinsure with government insurance companies.
Yeah, reinsure with government. So you have been dealing in this for about 2 decades or more.
Yes.
Give us a first-hand experience. Have you had to claim, you know, make some claims? Give us an idea of the process and the timing, which of course is very important to any business person.
Yes.
And of course the bureaucracy and what it costs you. And then what you got at the end of the day.
So there are two perspectives. I'll share when you don't get, you know, any claim and when you get. I've had quite a lot of my clients who have gotten claims. So the process is, after you insurance, the process you get them, you fill a form, they come to inspect your farm. Ideally, if it's for crops, it's 2 weeks after germination. If it's for livestock, they want to see what they are insuring. So once they issue you that policy, if you have a claim, it is statutory that within 48 hours, you must communicate with the insurance company to come visit. And so if you do that, then you will get a claim, provided the details you gave them at inception is right. So you don't find the insurance company say, you said your farm is 50 acres. They may not really check. But when there's claim, they will measure everything. So if it is 40 acres, you are not going to get a claim because you've lied.
No, I think these are part of the discouraging factors, because one would have expected that if I claim that my farm is 40 hectares and then I say that I have these crops and I want to insure against pests, for instance, then you will come and check and whatever I have claimed and ensure, and then we both put pen and paper, and then we have an agreement that this 40 hectares of land has been insured. Now, if you don't check, and then you only check when I'm asking for, I mean...
So in the document, it's written that the facts you provided has been confirmed by
the little print, I think that's what you guys call it.
No, it's not even little, it's bold. But the challenge we always have is, and it has happened to me before, where you rent a land and per segment, you've measured like 5 and there's remaining 2, and maybe there's bad weather, so okay, 5 has been accurate, so you just forget the 2. But much later, you now find out that instead of each segment being 20 hectares, that's about 50 acres, you now find that 20 acre, instead of 50, it's now 25, the last 2. So with you, you just feel, oh, you've done 5 out of 7, it's okay. But when there's claim and they check round, so bottom line is that...
Which is why the insurance company should check at the beginning.
So the truth about it is that all insurance companies in Nigeria are understaffed. It takes a lot for traveling, you know, to visit those rural communities. So they are understaffed, and those agric insurance departments for companies that have other insurance portfolios, they are also understaffed and underfunded. So that's where you have that. Another, so you know, I have quite a lot of clients who have gotten funding. Maybe the rain stopped, you know, they've gotten. However, in recent times, we've had challenges, especially COVID, post-COVID era, herdsmen, you know, NSAS, all those issues affected. And what would normally happen is that, so take for instance my scenario where the farm, you insure, you don't insure, when your staffs are afraid to be killed or assaulted by bandits or herdsmen and they run away. That is not covered by any insurance.
It's not covered by insecurity?
Insecurity is there's a riot. If there's no riot...
Or there's an attack or invasion into the farm?
Yes, attack or invasion into the farm, yes. But when there's no attack or invasion into the farm, but around the farm, but the staff run for their lives, that is not covered.
Maybe we should create a policy for that too.
That is...
Because, I mean, it's happening in the world.
Oh, it's happening, and that's why a lot of farmers, especially medium and large, you know, are having to shut down. And so many of them also take high interest, and most sign checks as collateral before. So you find many investors who have been patient, but hey, if you could not complete the project and you lose everything, you can't honor the check. So you have quite a lot of people paying the checks so that, you know, you're on the speed trying to get their money. So instead of trying to produce, you are trying to get the money, but you lost almost everything. So, that's what happened to me also. These things are real, but bottom line, we need more creative insurance. We need government to even fund the insurance, their insurance company, because they can, they have buffers to be able to handle that, to be able to give us more creative insurance policies.
So when we talk about food security, I think this is another area that it can be assured, especially in these times that are not very friendly at all. We have a lot of things hitting at supply, hitting at the farmers. You have fertilizer, and a whole lot of things that are standing in the way of providing food for Nigerians.
So let me balance the conversation also. So you have the government insurance, and currently it's only the government insurance company doing it, where for any livestock, it's 2.5% of your total cost of production that will be paid as premium. So when you have like the bird flu, there's what you call extension, another 2.5% on it. For like African swine, I think that is 5%, so you pay 7.5%. But they've added the like EDA attack, which is you pay 1% extra, but you need to get dogs.
This is unique to Nigeria. Do they have it in other countries?
No, I've related across West Africa, Ghana, Burkina. They don't have all those. In fact, Nigeria's agric insurance is still way the most extensive, the most robust. However, inadequate we think it is, across West Africa.
Yeah, but the least patronized.
Yeah, the least patronized. So we need to have government put a lot of funding in creating that awareness, because it's subsidized, and we need the insurance private sector also to be all out. They're talking a lot. But when it comes to the implementation, many of them, are not really doing the work. They are doing the insurance like other insurance, but agric is unique. So there's a lot of good, beautiful designs, but the implementation, no, because we worked with quite a number of them to ensure that they have what they have today.
Talking about insurance, making insurance attractive generally, not just for agriculture. I know there was a conversation of reimbursement. So if I keep paying an insurance on my car, for instance, and the first year I don't use it, the second year there should be some sort of reimbursement. There's tax rebate, perhaps, because I mean, if as a farmer you struggle in the midst of your lean resources and outputs, and then you get an insurance, and then the first year you do not need it, the second year you do not lay any claims, if you get something, it could give your mind somewhere that, even if I don't have to claim, I would still get something while also being insured.
So you get some discounts. I know that exists. I can speak for the government insurance because, we've done that. But for the private sector, it's very, very meager. What you get is very meager because they run pure commercial business, while for the government, you get good discounts on the insurance. If you don't make claims in 2 years, 3 years, you get good discounts on it.
Okay. And then with COVID, insurance practitioners were talking about getting a policy for pandemic. Do we have anything like that now?
No, we don't. What can be equated also to a pandemic is an epidemic devastation. So like if you have like the locusts that ravage like North Africa, if you have locusts invade almost all the northern states because they border those northern areas, then if ideally, like insurance is supposed to pay you 90% of your cost of production, they would adjust it. And that adjustment may go really down because it cuts across regions. And they can't handle, don't forget, you pay 2.5% of 100,000 is meager, it's volume. So when you now have it across like 2-3 regions, they can't pay. So government needs to come into that, and many insurance companies also will come on board.
Wow. A lot of things for government to do.
Yeah.
But that's why they are the hem of affairs.
And also to get the youths involved, because I'm big on the youths now, we can't feed ourselves without the youths now, is they need to come up with insurance policies to woo the youths to say, hey, whatever you do is insured, like a national insurance scheme for youths is insured. So the youths wants to come in that, okay, we'll put in our best, but we won't lose everything if something happens.
You know, when we talk about the youth getting involved in agriculture, I think it starts with mechanized farming.
Yes.
The youth don't want to get their hands dirty. And you don't blame them, because you also want to have enough yield.
Yes, semi-mechanized. Fully mechanization may not work right now because our lands, the maintenance, spare parts for those equipments, but semi-mechanized, adopting something we have in China, in India, you know, that will work. But all those full mechanized things you see online,
in China?
No.
Let's be realistic.
Sustainability here may be a challenge. So you can increase yield by like 50%, 70%, but those big equipments don't work here. You find them moribund after 3 years.
Wow. Okay, it's a huge conversation. Food security is on top of the list now after inflation.
Yes.
I mean, you're right in the midst of inflation anyway. Thank you so much, Mr. African Farmer Mogaji, Chief Executive Officer of Farm Credit Nigeria, NG. Thank you so much for sharing your thoughts with us.
Thank you for having me again.
We'll take a break now. After the break, we'll head to the markets. Which of the markets? Find out. This is Business Morning on Channels Television. Welcome back. Still watching Business Morning on Channels Television. Let's head to the markets now, starting with the money markets. And last week we saw that the overnight rate remained flat at 14% almost all through the week. And of course, we can connect that to the tight system liquidity and outflows of NTB issuance last week. So even though it was in a double digit, it was mostly tight. And then there was CRL debits in the absence of any significant inflows. There was also, of course, the FX auction last week. In the Treasury bills secondary market, it remained bearish for most of the week. Intertwined factors of persistent illiquidity in the system, participants selling off their positions on the short to mid-term instruments, and we did dwell a lot on this last week with a lot of our analysts, and still expecting to see that inflows from FARC, which is one of the factors we're expecting to lift the market. As a result, the average yield across all instruments expanded by 50 basis points to 5.4% across the segments. Average yield expanded by 60 basis points and 18 basis points to 5.4% and 5.3%. At the NTB, the Treasury bill and almost secondary markets, this week's NTB PMA, the CBN offered 174.09 billion to 13.88 billion in the 91 and 364 billion. Now, eventually, the CBN allotted 197.65 billion. Respectively. And there we have the figures from OMO. This is actually for Friday. The deals were just 9, valued at $2.28 billion. Then in the foreign exchange market, the FX reserve maintained its accretion for the 5th consecutive week as the gross reserve position grew by 230.14 million week on week. That's what we saw there last week. Well, let's head to the equities now and see how that market, well, I think the market ended in the red. It was contested. It was really a tight contest between the bull and the bear. Obviously, the bull surfaced as the winner, 0.24% we saw there. And between the bulls and activities on the domestic bourse, the All-Share Index inched up 0.2%, week-to-week gain to close at 51,829.67. That's it. What's ETI, FBNH, those really led activities. Volume, value in the green, while deals dropped compared to the week before that. The banking, the financial services sector really pushed the markets that we saw last week. Well, we have Rotimi Fakaejo now joining us to give us an overview of trading in the market last week and what to expect this week. Good morning, Mr. Fakaejo. All right, looks like
Good morning.
Oh, okay, great. Good morning,
Good morning.
Mr. Fakaejo. Awesome. So the bull won the battle last week, but it was a tight contest.
Yeah, that's still very appreciable because you and I know the extent of the illiquidity. The volume of value being traded in the market now is not really encouraging. The market for some days have been trading below 2 billion naira value. And that is quite something to really look at. But when you look at what is happening in the money market space, then there is no cause for alarm at all for what we are seeing in the equity market. But all in all, with the way things are, I think the OSHA index is standing at very close to 52,000 basis points is something to really applaud the market for. Because vis-a-vis what we are seeing all over the economy, rising inflation, illiquidity, inability of people to be able to meet their needs financially, I think all those ones are really telling on the market. But all in all, I think the hope we are looking forward to this week and maybe next week is when the Q2 and half-year report begins to trickle in. And I think that may just be a form of stimulating factor for the market. But before that time, I think we'll just see the market stabilizing at where it is, maybe a little downward trend today, another upward trend tomorrow. But I don't see anything very major happening within the market, except if we see a high demand for stocks in the top 3 categories of capitalization.
All right, Mr. Fakaejo, thank you so much for that. I'm sure we'll have you again in the course of the week to give us another overview and expectation from the market. Thank you so much. Enjoy the rest of your day.
You're welcome.
I'll just hand over to Ladi now. Let's see if the crypto market is any better today.
Not so much better. We're seeing extreme fear still. 14 points, or better than what we saw last Friday, which was around the 10, 11 points, but we're 14 this time. Hopefully, this could get us to greed at some point in this market. Market cap there, $867 billion. It's down about, up about 0.09%, and we see volume traded $37.75 billion. So it's still extreme fear. Bitcoin right below $20,000 mark. Let's bring in Rume Ofi now, digital market analyst. Hello, Rume.
Hello, good morning.
Morning, Rume. So it's extreme fear in this market. Retail is very afraid at this point. They're not looking at touching Bitcoin, but we're seeing a couple of these investors like MicroStrategy. We're seeing El Salvador adding 80 Bitcoin. Are they not scared at this point?
You know, if you have been in this space for a while now, you'll see that bear seasons are always opportunity to buy more. It's very scary for those that are just coming, but we've had series of bear season, and at the end of the day, if you take that risk, you get a good reward at the end of the day. You know, so it's an opportunity for them to jump in. I think if you've been in this space since 2011 to now, you should have experienced about 4 bear seasons, if I'm not mistaken. And I think it's a very great opportunity for them.
Right, and it seems bear seasons actually hit the same way every time. You feel like it's going to go to zero. Most analysts are saying it's going to zero at this point. How are you seeing it?
Exactly. When they say it goes to zero, that is an indicator that we're very close to the bottom. In 2011-2012 bear season, the market was slashed about 40%. In 2013 to 2015 bear season, it was about more than 80%. 2017-2018 bear season, it was 84%, and that of 2019, which is more or less like the COVID time, was about 62%. So it's again a way to shake a lot of weak hands out, right? But so it's also an opportunity for some other people to make life-changing money. You know, so just flip your psychology and say, oh, everybody's scared. Let me take this risk and get in and see how far it turns out.
And Rume, I wonder why everybody is always against weak hands. They are trying. It's not easy in these markets, Rume.
I know why they are. It's not like they're against weak hands. It's just that people give very short time frame to all of these as an investment, and it's not very good. You see it all over, even in the traditional market. It is those that have the huge amount of patience for a long period of time that really sees the gain. You understand? So it's not something you just give a few time frames to. So for a long time, just close your mind and give it about 5-10 years.
All right.
I'm very sure you see the dividend. Thank you very much.
All right, Rumi. Thank you so much, Rumi. Always great talking to you. All right, looking at the price of Ethereum, they'll see $1,000.55. It could go below $1,000. The bears are trying to push that as low as they can. It's down 0.73%. So it's still extreme fear in this market, but some traders are optimistic about this week. We'll see how that plays out.
We'll certainly see how it goes, Laddie. Today's Monday. We have 4 days to count down what is on the show. Thank you so much for that update. So that's it on the program today, the first one for the week. It's a journey. We'll have a second day tomorrow on Business Morning. I'm in John Mekwa, but do remember 1:30. Laddie will be here with Business Incorporated to give you updates from the world of business. Enjoy the rest of your day.